Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we have to talk about Dominican Republic Airbnb, responsible host. And with being a responsible host, they're outlining that you need to pay your taxes in the Dominican Republic. Oh, yes, you thought the tax reform was bye bye? Oh, no, you are mistaken. And welcome. Stay tuned and watch. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, I want to thank you so much for being here. And please share the videos because a lot of people who are buying and doing business in the Dominican Republic does not understand what their tax obligations are. That's why you have to buy responsibly. But now some people are going to have to account for additional taxes that they will have to pay that they did not think they were going to have to pay, whether it's business or residential. It does not matter. You're going to be taxed. So before we get into it, there will be two parts because this is going to be very, very long, unfortunately. So it's going to have to be two parts. There's just no way around it. All right. Welcome to part one, because here we're at the Stop Struggling Now YouTube channel page. The reason why I show this is because over here on the right hand side, courtesy of YouTube, they show a few members of our channel. I would love it if you hit that join button because that's how you help financially. Now, of course, we said share the video. Of course, we say subscribe, click the bell so you get all the notifications. But what you don't know is as a member of the channel, they receive special messages under the community tab. And they receive 1 or 2 videos per month. And they receive the password to log into any live stream so they can join me on any live stream, of course, and discuss anything they want to talk about. And then on Wednesday night, they have the honor of being the only ones that can be in the chat room on our Wednesday night live streams at 8:50 p.m. at night. Now, let's get into the upcoming event, the Investors Forum. The Punta Cana Investors Forum is about a month away. Get your tickets now. $199 per person. Please sign up because as you can see, the days December 2nd, 3rd, and 4th, we will be going around doing business. First day, we're going to see attorneys. Second day, we're going around to see projects, discuss with developers, see about any special deals. Maybe some of you might want to buy something, not mandatory, not really anything, but you'll get an idea on some things that are available. Then on the third day, which is the 4th, we will be dealing with banking information, loans, lending. And so that therefore you'll understand exactly what's going on. So go over to ssnlifestyle.com. You can see here investor forum tickets, buy now. Either way you slice it, this is what we're doing. There is the schedule. Here's the recommendation. Stay in Los Corrales, El Cordecito, Bávaro area if possible. You can come over here, read the agenda, and then you can see some tickets that are available for sale. Get your tickets now. Get everything in order now. It's a lot easier. Now, the other thing is this one. Airbnb launches responsible host section to educate Dominican hosts on tax obligations. Dominican host is just like an American host. The reason why I say this, you can live in America. You can have your condo, villa, townhome listed on short-term rental platforms. The short-term rental platforms are probably going to sign an agreement with the Dominican Republic, the country, to pay the 18% ITBUS. It's going to be added into the bill that your guest will be paying. So that's the good news. All right? That is pretty much I expect to happen. Now, the bad news. We'll get into it. I'll have a link down below in the description box and around on the podcast page. You guys can find it. There'll be a link to this article from Dominican Today, or you can go to Dominican Today and search and you'll find it. Now, here's the thing. The educating local host about their tax obligations. Now, I'm going to skip because here it is. Under the new section, Airbnb emphasizes that individual hosts are fully responsible for meeting their tax obligations, as circumstances may vary. So you ask, why do we go see attorneys? This is why. Things change year over year. So if you have an attorney, something comes up, this is going to come up. We don't know when it's going to be implemented. I'm pretty sure it's going to be implemented because Airbnb themselves had said, we want to be part of this. We want to come and do this. We want to be taxed. All right? They don't want to lose the country. Now, I'm going to go back up top to give you guys the country's tax framework, including the tax on the transfer of industrialized goods and services, ITBUS, and the income tax, ISR. Those are the two things that you have to worry about. Now, here's the guidelines, ladies and gentlemen. Essential steps for hosts, such as registering with the National Registry of Taxpayers, RNC, and including the 18% ITBUS on invoices to guests. Now, my interpretation of this may be different than the attorneys, but we'll know December 2nd because that's where we'll be. Now, here's the thing. I believe this is for people who are, let's say, in the Dominican Republic. You wanted to have a property manager in the DR? Fine. But they're going to need a National Registry of Taxpayers RNC number, and they're going to have to charge people 18% plus whatever they charge, and they got to invoice them. That is for ordinary citizens. Remember, the digital, I believe, will be taxed into the digital platform's payment from the customer. So that hopefully is simple for people. Now, here's where the problem comes in. Those earning above a specified threshold, which we'll get into this in part 2, must file an annual ISR return, which is a progressive tax based on income. Now, here's the other thing. For hosts operating as a registered companies, they are subject to a 27% ISR. Remember, all of you who wanted to have your LLCs, otherwise known in the DR as SRL. I know a lot of people keep asking over the years, hey, should I just get an LLC so I have a tax write-off? Well, do you want to pay a higher tax rate? That's why most of the attorneys say, why do it? You'll have to expend, you have to make a monthly report for your taxes if you owe them. You also have to pay 27%, and you're going to have to pay 1% for all of your recorded assets. So you may not get that comfort tour. You see how this works, right? Okay. Because if you have it in your company name, that's considered an asset. Okay. On income. And an additional 1% on recorded assets. All right. See what we're talking about here? So again, this is pretty serious. Now, I'm going to skip ahead because we're going to get into this in part 2, but I want you guys to know it's progressive tax rates similar to America. The taxable income starts at $416,220. You pay $0 in taxes. This is about the equivalent of $7,000. All right, just so you guys know. So therefore, we go 7,000, and I don't really know where the other number goes to, but I know this number is only 867,123 Dominican pesos is around 14,000 $500. If you make more than that, then here's the breakdown as it is progressive. So see, when you go in these tiers, this is where the problem comes in, where you have to pay more taxes. Capital gains. Here you go again. Capital gains tax is when your cost of, I won't get into it because this will be part 2, but this is when you buy something. Let's just say you bought something for $100,000. Then you turn around and sell it for $300,000. That $200,000 is called your capital gain. There are ways to reduce it, but just on the simplistic format, you're going to have to pay 27% of that $200,000. That is $54,000 for companies. A person, that will be $50,000 because you pay 25% as a person, and it's in capital gains. Now, here's the other thing, and you already know what the ITBIS is. It's going to be 18% if you're in the short-term rental market. All right, I just want to reiterate, because here it is. This tax framework applies equally to small businesses and larger corporations in the short-term rental sector. So now you got it, ladies and gentlemen. There's no way to get out of it. It's coming. And all of you who rejoice for that tax reform bill, now you may not be rejoicing. It did not go away. These guys had to borrow $625 million. If you missed the Dominican Republic Weekly, episode 31, I went over it. I told you when they did not do it, they were going to do something else. And that something else is they borrowed money from outside sources because they could not get that tax reform bill passed that now costs citizens more money. That also means your currency is going to take a hit. And now I see it's 60-1 instead of 57, 58, 59. They're trying to push the 60-1 now. It'll be up to 61 if they have to keep borrowing and don't have the tax revenue from the citizens. This is what people don't understand. Your cost of living has risen ever so slightly, but it still has risen. So I want you guys to understand, when you're trying to become an up-and-coming developed country, you can't be in 1965 mode. You have to be at least to the 2020s with your infrastructure, with your data centers, with your phone lines, your electricity, your water, sewer, garbage. You got to get on board with that, and that's going to cost a lot of money. The longer you delay, the more it's going to cost you. And that means travelers to the island is going to be paying more. Citizens who live there is going to be paying more. Nobody's going to like it. But again, this is what you forego when you were hitting those pots and pans and thinking, wow, we dodged a bullet. Well, kind of. But with all that said, stay tuned for part 2. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. Every time you make an investment, there's always all of these extra pieces that you have to put together. You have to make smart investments. This is why I've been trying to guide you not to go over $250,000 unless there is a reason for purchasing real estate in the Dominican Republic. Because I knew sooner or later they may tax it. I didn't know for sure, but it was obvious at some point when I kept saying, well, where's the infrastructure? Why aren't they doing the infrastructure? Where else are they going to get the money from if the annual wage in the Dominican Republic ranges from $9,000 to $24,000? It's all different kind of numbers. I don't know which one to believe, but I'm believing it's more like closer to 10,000 than it is over 20 on the average citizen in the DR. That they will not be able to get enough taxes. So therefore, where else can they grab taxes from? The people that are investing in the country. It's only natural. And with all that said, keep your head up. Keep moving. And I'm out.